It's about that time of day again, isn't it? Boy, that time flies when you're having fun. Hope you guys had a great day out there. We're back in the action, though, once again. Time to get back to work. It's Thursday evening. It's July the 18th, 2019. My name is Joseph, by the way. And as always, welcome back to your nightly newsletter. Now, in case you guys forgot, my name is Joseph, right, again, and I help traders find high-quality trade setups using a very simple three-step trading strategy that we teach and trade together every morning in our trade room. But my job is a little bit different tonight. My job is extremely important. Tonight, we're hunting for the best levels of support and resistance, the best situations to look for tomorrow, the best setups I see setting up on our favorite futures markets. Also, we're ready to rock and roll for tomorrow's Friday morning's trading session. And I got a lot to cover here tonight on the video. We're going to grab some oil, S&P, Nasdaq, some gold, and of course, we'll wrap up tonight on that mighty euro. I'm going to jump in here first on the black gold, though, that Texas tea, that crude oil futures. Boy, it's been a busy week here for all the crude sellers, hasn't it? It looks like we've had another strong run down. We're starting to settle into about of a trading range right now, but I've got my eyes on some really nice setups for Friday morning. Let's dive into that chart here on oil futures here first before we break into the other markets here tonight. Jumping into that black gold, that Texas tea, right, that crude oil futures. What do we know about oil besides the fact that it's just been getting pummeled, right, all week here this week? What do we know? Strong move down, right, into a trading range. Bear market, right, into a range. What does a range tell me to do? Buy low, sell high, avoid the middle, right? I got my buy zones ready. I got my sell zones ready. I'm looking to be a seller off of this high. And of course, if I can, right, I want to be a buyer off of that low. I think we might have the ability here to time this and get both sides of this market tomorrow. I'm looking for a sell up inside my sell zone, looking for a buy down inside the buy zone below it, buy low, sell high, right? Avoid that middle. And in tonight's video, we're going to talk about these specific entry patterns that will work best to buy low and sell high. And then I'd be lying to you if I said I wasn't thinking about a possible short covering rally, right? We've been getting clobbered here, right? These bears just one, two, right? We're like a zillion legs down right now. So what would a reversal look like? At what point can we start thinking about being a buyer on this? We'll talk about what a short covering rally will look like and the best patterns to trade them tomorrow as well. If you're an oil trader, you definitely owe it to your trade account to make sure you stay tuned for more. Over on the S&P tonight, what do we got in the S&P? S&P has the rally going on right now. S&P, of course, nice, big, strong, right, bullish trend. Now, anytime I see a strong move in one direction, I always know I want to wait to buy a pullback because buying a pullback allows me to risk small, right, to earn large. And of course, I'm always looking for those risk small, earn large opportunities, and that's definitely something I'm waiting for here tomorrow on the S&P. I'm not just looking for the pullback, I'm looking for what will most likely be potentially 4 different setups as this market pulls back. Now, of course, I got some key levels of support. We're going to talk about those levels of support tonight. And of course, what if we keep going higher here, right? As you can see here, we have a trading range up here. And so if we keep going higher without getting that pullback, we have to adjust our strategy just a little bit of adjustment there on the S&P. We're going to dive into the S&P in a lot more detail in just a moment as well. How about that Nasdaq? The Nasdaq is very similar to the S&P. Boy, the Nasdaq is setting up beautifully right now. I don't think you could really paint a better picture for a buy setup right now. Nasdaq is obviously bullish. We know momentum is so strong right now. They barely even pulled back to the moving average, right? They just tapped it once. So you know, anytime we don't see many pullbacks like this, right? Anytime we don't see many, deep pullbacks like this, we know there's always going to be a bunch of buyers that are waiting here. And again, you want to try to buy a pullback right now because a pullback will allow you to risk small, right, to earn large. And again, much like the S&P, right, I've got about 4 different patterns we'll talk about on that tonight. But the real big thing here about the Nasdaq is you've got that that trading range, and we're right back in that range right now. So, range-bound markets, they really tend to trip us up a little bit. And so we'll talk about tonight, right, how to trade this range properly. And of course, we'll also talk about, right, if the market keeps on going, because we have a couple key levels as we go up towards that big round number. So stay tuned on the Nasdaq if you're an NQ trader. And then how about that gold? Boy, oh boy, we really nailed it this week, right, on the gold, huh? All the gold traders out there, I got a ton of emails from you guys this week about gold. So great job, right, on picking the bottom. Great job on waiting patiently for that pullback. Man, oh man, I don't want to jinx us here, but we have another great setup setting up for tomorrow here on the gold. What do we know about gold right now? We know we are red hot, right? Look at that strong move higher. Anytime we see a strong move in one direction, we always know, right, that buying a pullback for a retest of that high is going to be our mission here tomorrow. And with that pullback, I've got a couple key levels of support. Now, I've got my channel, I've got my reversal line here, but I'll tell you, there's one very important thing about this channel. Now, if you're a client of mine, you probably know the answer to this already, but if you're not, you want to make sure you stay tuned, because that channel tells me it pretty much tells me exactly where I want to be looking for that buy tomorrow, more importantly than anything else, right, here on the gold. So we're going to break this yellow metal into small bite-sized pieces for us. What if we go lower? What if we keep pushing higher, right? And what is likely, right, is what if we see a bit of sideways chop? We're going to cover all the different variables here on the gold, and hopefully I can keep this winning streak going there for you guys, right, on this gold tomorrow. And of course, over on the euro real slow until all of a sudden all hell breaks loose and this thing just shoots right up higher there, right? Dollar dropping here this afternoon, sending this euro, right, racing higher. This is what I call a spike. Anytime we see a spike, we know there are 4 different scenarios that we may want to be prepared for here tomorrow. My biggest one here is, again, I want to buy low, right? I want to buy low. Anytime I see that nice strong trend, right, I want to buy low, because why? Buying low in a bull market allows me to risk small, right, to earn large, right? Risking small to earning large. So bottom line is, we know we are red hot bullish. There are 4 big scenarios, 4 different situations I'm looking for tomorrow. Yes, I want to buy low, but to do that, we're going to have to see what we get in the next few hours. There are 4 things I'm looking for here, right, on that euro. I've got my areas of support I'm looking for. I'm going to talk about the entry patterns. We'll talk about what to expect here as we go into a summertime Friday session here tomorrow. I've got a lot to cover here tonight on this video, as you can see. Euro, gold, Nasdaq, S&P, crude oil. But before we jump into those charts and put this plan together, I want to make sure to remind you, never miss another great newsletter by joining our mailing list. Now, you may not be aware of this, but just before I publish this video on our YouTube channel, I fire off an email to all of our best clients on our mailing list. I want to make sure you get that email. I want to make sure that you never miss another great video newsletter. That way you are on the first people to know, right, when this video goes live. And to join our mailing list is very easy. All I need is your name, your email address, and then hit that subscribe now button over on the right hand side. And don't forget, guys, when you subscribe to join the mailing list, I'm going to send you a welcome email. So you need to check your email, because inside that welcome email there are 2 important things. First is a verification link to verify that you got the welcome and to give me approval to keep emailing you again. The second thing is, right, is a whole bunch of goodies so you and I can get the most out of our time together every evening on this newsletter. So don't delay. Pause the video if you have to. Join that mailing list. Give me your name, a real email address, and then don't forget, when you join the list, your job isn't over. You've got to check your email. And sometimes those emails, right, they get stuck in your spam filter. So don't be afraid to check that spam filter if you don't see the welcome email from us, right, instantly after you join, right, that email list. Also, one more thing here, please. One more thing. I know you guys have a busy schedule like I do, and I appreciate your time on this, but I need your help. Down in the comment section below this video, I need your help. what would you tell the rookie version of you not to worry about or to focus more on? If you could go back in time, if you could jump in the DeLorean, right, with Marty and go back in time, if you don't know that reference, by the way, something's very much wrong with you. By the way, anyways, right, go back in time, right? Go back in time in the DeLorean, and what would you tell the rookie version of you, right? I know what I would tell me, right? I would say take risk seriously. Right? I would say learn to use a moving average. Not dozens of moving averages, but learn to use the right moving average. And I would also say don't go against the trend so much, right? Those would be the words of wisdom that I would give to my rookie self. What would you give to your rookie self? Right? Hop back in the time machine, go back in time, or maybe you're a rookie, right? What's the most important thing that I can teach you on this video newsletter? Drop me those comments in the comment section below. It means the world to me that you would take the time out of your busy schedule to help me keep improving this video. But I'll tell you right now, your time is definitely valuable and I appreciate you being here. Don't forget, while you're down there, hit that thumbs up button in the video tonight. If you tune in every evening and you watch this nightly newsletter, it would mean the world to me. Give me a thumbs up right on that video, because you'd be amazed how helpful that is to exposing these videos to other traders who can use our help as well. So drop me a comment in the comment section below, right? What will you tell the rookie version of yourself? And second thing is, give me a thumbs up on that video, right? It means the world to me. Thank you so much for your time on this one. And don't forget, if you have any questions, right? I'm going to date myself right now, but I actually talk on the telephone. I know. Call that toll-free phone number if you have any questions, right? Maybe you've got questions about what's the best broker right now? What are the best charting softwares, data providers, right? Or maybe you want to learn about the free pass to our trade room, or you want to access our free trading classes. Use that toll-free phone number. Use that live support tool in the upper right-hand corner. And again, call the office, right? I look forward to picking up the phone, answering all your calls. I love talking to you guys. I love learning about new traders and how I can help you guys out. So please call that office line if you have any questions. But in the meantime, right, let's get to work, shall we? Because tomorrow is a summertime Friday. Now, we got one more day left in this third week of the month of July. And of course, with tomorrow being a summertime Friday, we know it's early in, early out. It's not just a summertime Friday, but any Friday for that matter, right? Any Friday for that matter is an early in, right, early out scenario. So tomorrow morning, we're going to open up our trade room at 8 o'clock Eastern time, like we do every morning, Monday through Friday. And of course, we'll trade the strategy, right, all the way through until usually about 11:30 a.m., right? But on a summertime Friday, you really got to have a reason to be trading after 11 o'clock Eastern time. And honestly, tomorrow morning, I would be paying close attention after 10:45, right? If we aren't seeing much volume, be careful, because what you got to remember is late in the day on a Friday, the volume dries up because the professionals leave early, right? They're done for the week. The problem is there's rookies left in the market. And where there's rookies, there's emotions, right? Buying high, selling low. Here's the problem. The best setups don't work very well when there's no professionals trading. And after 11 o'clock tomorrow morning, most professionals are going to be gassing up the boat, heading to the lake, going to the beach, playing some golf, right? They're going to be enjoying, right, what is most likely the best weather of the year, right, wherever they live, right? Of course, Northern Hemisphere talking. So tomorrow morning, get in early, get out early tomorrow, right? Don't try to be a hero late in the day on a Friday, because that usually, right, that usually works against you. Now, do we have any news tomorrow? Not a lot of news tomorrow, right? Well, actually, there's none, right? There's no major news on the schedule, right? All of the big Red Star news events, you'll notice here, right, have been spent. So there's no major news on the schedule tomorrow, but I mean, do I need to kind of list off some of the stuff that is constantly, right, kind of peppering these markets right now? Obviously the Fed, right? We got China-U.S. trade talks, right? And of course, OPEC, right? OPEC, the Middle East, right? We heard about Iran, right? I guess probably more, right? You know, today we heard about the kind of negotiations between the Iranians and the U.S., right? About that nuclear treaty, right? Which is being told the reason why this market drops so quickly here. So as you guys can, right? As you can assume, there's no major news tomorrow, But there sure is a whole lot right under the surface, right? The Fed with rates, right? The U.S.-China trade negotiations, and of course this, the kind of turmoil here between the sanctions in Iran, right, and the price of oil. So those are three things that we are keeping our ears and eyes open for tomorrow as well. I would encourage you to keep, right, a good look, right, or good, at least be aware that those are affecting us here tomorrow. So even though we don't have a lot of scheduled news, there's a lot going on out this world right now that we want to make sure we are prepared for. So now you know what the schedule looks like tomorrow, right? Get there early, right? But don't plan on eating lunch at your desk tomorrow, right? Get out from behind that desk. Enjoy your time, right? As I always remind you guys, this time of the year, right? Now is the time to get out from behind that desk on a Friday afternoon, spend your weekends, right? Enjoying yourself, having fun with family and friends, because towards the end of the summer, when the weather starts cooling down and the markets start heating up again, right? You better get the fun out of the way, because we get some money to make right into the end of the year. We'll talk more about that tomorrow in the trade room. In the meantime, though, right, let's get these charts going here. Let's get some charts rolling here for us here tonight. What do we know? What don't we know? Let's put these plans together here. We got crude, S&P, Nasdaq, gold, and of course, how can we forget about that mighty euro? What do we know about oil right now? We know we have a bear market. Right? We also know we are one hell of a bear market down right now, right? This has been nonstop this week. 1, 2, 3, 4. Now, we talk about this quite a bit, right, in my trade room, but whenever I see 4 legs down, I always know it's going to be difficult for this market to keep going without some sort of pullback. And sometimes those pullbacks turn into full reversals. So I definitely want to be ready for the pullback, and I want to be open-minded, right? I'm not trying to predict a reversal, but open-minded to, right, what a reversal may look like and the best ways to trade it. What else do we know? We also know that after we finished up this session going lower here, right, we know the market kind of slid around here for a little while, right, going sideways. I'm going to call this a trading range. Okay, what does a range tell us? A trading range tells us to use the size of that range to find my sell zones and to find my buy zones. Right? So I use the size of that trading range, right? The size of that range now to tell me where my sell zones are, and also to tell me where the buy zones are, right? Buy low, sell high, and avoid the middle, right? That's what a range tells me. What else do we know right now? Let's get some of this stuff off here. That way we're not distracting us too badly. What else do we know right now? We also know that if I connect these lows, right? Bring them on down, right? If I connect those lows and bring it up to these highs, right? Fits pretty nicely. In fact, you can add a midline to this, and that midline also fits, right, pretty well as well. So that would be what? That's a bear channel. Okay, what do we do with a bear channel? We sell off the high. Right? Now, that's a really convenient place for it, because you can see, right, that channel lines up right with our sell zone. So we've got some great opportunities here to be a seller off the high. We also have a lower low here, right? And that lower low creates what we've kind of called an expanding triangle, right? We may also see it start to go off the highs too. The reason why that lower low is important is because if this market tries to make a run going lower, right, now I can look for that sell to fail, right, and buy back up. So I can buy off of that low, right? As we run lower now, I can try to be a buyer now as we go in off that low. So the range tells me buy low, sell high. The channel tells me to sell high, right? And of course, I know I've got that, right? I know I've got that range with that expanding triangle. Okay, let's put all of these clues together here right now. We know we're bearish. We know we want to be a seller. I've got my sell zone. I've got my top of my channel. What's the best way to put this together? First of all, we go up, right? Market now popping higher here. Let that moving average come over. We're running right into resistance. Great place right now to look for the buyers to try to buy off the moving average, so we can then sell right into their stop losses for a failure pattern. Failure pattern, right? Into pullback pattern coming off that high. Now, we just saw an example of this, right? Look up here. That is exactly what that will look like, right? So look up here, right? We go up. The buyers, of course, are buy the pullback off the moving average. What do? They fail. We slam lower into a pullback, right, and keep running. That scenario happens over and over again in these trending markets. So we know where we have our level of resistance. We know these are level of resistance up here. I want to see the market pop up, right? Let these buyers, right? Let these buyers think this market's bullish. Let them try to buy off of the moving average. I'll be sitting there waiting to sell right into those stop losses. That's a failure pattern. And then bring that moving average over, right, and that pullback pattern from there. Now, the failure pattern, right, into the pullback pattern were my favorite ways to sell, right, up above the high of a range. In this case, right, selling up into the top of that bear channel, right? Now, at some point, those bulls may hold this pullback, right? What if they hold that pullback as they go higher, right? What if they would have held that pullback? Well, now that's when I know I can start being a buyer on this, right? Now I can look for it 1, 2, 3. If we start seeing some strength coming off that moving average now I know these buyers have taken control. Okay, now what do? Do I buy up here now? No. You don't want to buy high, you want to buy low. What I'll do is I'll mark up that high. I'm going to mark up that high, mark up that low, find that now hidden channel, and now you're looking to buy the low of that hidden channel. And as we pull back to the low of that hidden channel, I'm looking for that classic failure into pullback combination, right? Failure into pullback, right? Combination. Failure pattern into pullback combination. So imagine now, right, if I kind of blow up that area right there, expand on that area, right, it's a seller failure into bullish pullback, right, as we go. All right, so look for the failure into pullback, right, that same sequence off the low of that channel. Okay, so now we're looking good, right? We want to go up, let these buyers try, let them fail, and sell it back down in. If those buyers hold, right, now we know it's a bull market. Find that new hidden channel, buy off that low. Perfect. Now, what if we sink right back down into that range now, right? If we sink back down into that range, I'm going to draw a trend line across these highs, by the way, right? And this will become, if I can remove this just real quickly here, right? This becomes now an expanding triangle, right? So let's say, for example, we fall off these highs, right? For whatever reason. Okay, now at that point now I've got that, right? Got that kind of, again, expanding triangle here now. Now I can buy off of this low, right? It's a range. I've got my buy zones down here waiting below, right? These buy zones are there for a reason. But here's the problem. It's not a bull market. It's a bear market, isn't it? So if this market runs lower here, what's the best way to buy in a bear trend? The best way to buy in a bear trend is to let the sellers try once, let them try twice, and buy off support. The key here, guys, is going to be, one, make sure you're doing it off of that trend line support. That's why I marked that trend line on there, right? For that kind of expanding trend line there. Then, second thing is make sure those bears have 2 clear attempts to sell this market short. Once you see those bears once and twice, now we know where their stops are, and now we're buying, literally buying right into those stop losses as we run back up. Where's my target going to be on that one? Good guess, right? Other side of that channel, right? Now, there's a reason why I mentioned that channel, because as we go higher here now, right? As we go higher here now, right? That channel will be right here. Okay, now here's what happens. These expanding triangles are very delicate. They don't last very long. We should be able to get the buy off of that low, but once it rallies higher here, that's going to be what? Very bullish. I don't want to sell this thing any longer here. That will be very, very bullish if we go all the way from low to high, right, of that expanding triangle. At that point now, I'm expecting sellers to try a couple times. Once, twice, and I can look for a slightly more aggressive setup, right? But this will be a decent setup here. It's called a 2-try breakout pattern, right? It'll break out higher. Bears will try once. Bears will try twice. And because of that level of resistance in the way, I'm looking for a trap entry just below the low of the first try, right? And you might notice that is almost just like the same type of pattern, right, we're already talking about, right? Those expanding triangles are great, great patterns. Just going to know how to use them, okay? So those are 2 buy setups that I really like here, right, for tomorrow. So if we do get a run lower, right, look for those bears once, twice, and go, and then we go up from there. Now, what if it keeps going lower tomorrow, right? I mean, it probably won't, but it definitely can, right? How do we know when we can sell going lower? Same thing. Just like the buyers are looking for that 1, 2, 3 breakout, 1, 2, 3 breakout, I need that same thing for the sellers. So strong move down, hold the pullback, and run from there. If I can see those sellers take off the downside, well, now I've got a breakout. I'm going to mark up that low, mark up that low, mark up that high now, and we're looking to sell off the high of that hidden channel. So the exact same way that the buyers will take it higher, right, the sellers can take it lower here tomorrow as well. We're 4 legs down. It's not likely, but it sure is possible. Anything is possible these days, especially in the month of July. So we've talked about a lot here so far, right? We've talked about failures into pullbacks. We've talked about nested failures, right? That 2-try off there, right? That 2-try breakout pattern, right? We've covered a lot in a short period of time, and I'm going to keep going. I'm just scratching the surface right now, but I want to give you a lot more information about all of those patterns. That way, the next time you watch the video, you know exactly what I'm talking about. And to do that, to get a deeper dive into all my favorite setups, my entire 3-step strategy, I'm going to put a link in the upper right-hand corner right now to access our free trading classes. The free trading course comes with our 3-step strategy, my 4 favorite setups, and of course, right, hundreds of examples of how we use those setups every day in our trade room. Whether you're brand new to trading or you're a grizzled veteran, if you're a new trader, you got to take advantage of that free course. If you're an experienced trader and you still haven't yet been able to become confident and consistently profitable, that course is going to change the way you look at the financial markets. Either way, it's a great opportunity for you. So grab that free course. Not to worry, pause the video. I'll be here when you come back. Oh, and don't forget, when you register for the free course, I'm going to send you an email to deliver the first lesson. So make sure you check your inbox, check your spam folder too, because sometimes those emails, they get stuck in your spam filter. Let's keep going. Over to the S&P right now. What do we know about the S&P? We know the S&P, right, is very, very bullish, right? They barely pulled back. Anytime we have a market that barely pulls back like that, we know there are lots of buyers, right, who are probably going to be waiting to buy that next deep pullback. What else do we know right now? We also know, right, that as we go higher here, right, I can connect these lows, right? Let's do that right now. These highs, right? I can connect these highs. I can bring it down to that low, right? And watch what I'll do here. I'm going to add a midline on here, right? And then drag that midline down to the low. And look what that creates. Isn't that incredible, right? That creates a hidden channel. Okay, so call it a spiking channel, right? Call it a hidden channel, whatever you call it, right? That gives us now a lot to work with here. Now, we know we're very strong. We know we're bullish, right? Anytime of bull market, like I mentioned earlier, I want to buy a pullback, right? I want to buy that pullback because a pullback allows me now to risk small, right, to earn large, right? I don't want to buy up here, right, because then my risk has to be too large, right? And there's no telling how far that market will go. What else do we know? We also know I've got a strong move off the low. That, of course, now will act as, right, 1, 2, and then 3. So depending on, obviously we don't know how far we're going to pull back right now, but depending on how far we pull back, right, the size of this leg back here, right, this move right there, that move right there, depending on how far we pull back, will be the measurement, right, for that next target. Again, I don't know it all yet, but once we get the pullback here, right, once we get that pullback here, that's where our next target, right, is going to be. Okay, so that's what we know as well, right? What else do we know here? We also know, right, so let's get that off of here real quickly there. What else do we know? We also know that we're right below that range, right, from earlier this week, right? Earlier this week, we had that range on here, that narrow range there, right? That range now is acting as a magnet. So the reason why it's important is as we go higher, we may get sucked into that range and we may start going sideways up here. So we do need to be ready for, right, just like oil went lower and went sideways, we got to be ready for what if the S&P goes higher and goes sideways. So we definitely have to be ready for all of these scenarios. Ultimately, right, here, we've got to be ready for the pullback, right, and we got to be ready for the market going higher here into some sort, right, of range. Now, let's plan the pullback here first, because there are ultimately four different types of patterns that I want to look for here. The first thing is I'm going to look for a nice deep pullback. Now, I'm hoping that we get down to the low of that channel here, but honestly, we may not get that far down, right? This may be seen as just a spike in channel, right? And we may only get just a, kind of a halfway move there, right? We may not get the full pullback, right, all the way down. But here's what I'm looking for. First of all, let's get that pullback off the high, right? Get that nice strong move going lower here, right? Get that below the moving average. Now, when I get below the moving average, you know what's going to happen, right? The sellers are going to think we're going back down to retest that low, and they're going to try to sell off that pullback. Right, they're going to try to sell off that moving average. Once those bears try selling off the moving average, now we know where their stops are, right? Now we know where the pain starts for those sellers, right? If you're selling that pullback off the moving average, your stop is right above that high. So that's where I can now look to buy. Again, I'm buying low now, risking small, right, with a big potential reward, right? Big potential reward. And again, how big would the target be? The target would be the size of that first leg, right? Right? So that's kind of, again, symmetrical target there would be our target. Okay, now, once that failure triggers, don't chase after it. Wait for the pullback, right? This is that classic failure into combination setup, or failure into pullback combination setup. Right? It's a pullback off the high. The sellers try to sell off the moving average. It's not a bear market. They fail, and we snap going back up to retest the high. Okay? What else can we look for here? A two-legged pullback. This is something you've almost got to expect because it's a deep pullback area, right? Because there's so much room for the market to pull back right now, expect a two-legged pullback. Two-legged pullbacks, one leg, two leg. That two-legged pullback now tells me up, over, and off, right, into that trade long. Now, the key to a good two-legged pullback is to see some daylight between the trend line and the candlesticks. Okay, that's kind of the trick. Okay, what you don't want to do is you don't want to get caught up in what we call a grinder, where it grinds down that trend line. You want to go up, over, and in. And guys, a lot of times, right, that two-legged pullback also sets up with a failure, right, into pullback combination, right? A lot of times, right, these will all set up together, right? Failure pullback as that moving average comes over. Okay, makes sense, right? It's a two-legged pullback into a seller failure, into a bullish pullback going higher. All right, guys, what else can we use here? Right? What else can we use here? Let's say, for example, right, this thing collapses, right? It collapses. Big, strong move down. If we collapse, is it bearish yet? No, it's only bearish till when? It's only bearish when the sellers can hold and run it lower, right? That's when the market turns bearish. Then we look for, what was it again? Mark up the low, mark up the high, right? We find that hidden channel, and we're selling off the high of that channel, right? But if we pull back a nice deep, right? If it really collapses, what oftentimes happens is the moving average comes over, the sellers will try once, the sellers will try twice, and we go up from there. This is called a nested failure pattern. Now, why would I choose a nested failure pattern? It's all about the strength of the pullback, right? The strength of that pullback will determine whether or not I've got to use the nested pattern, or if it's a shallow pullback, right? Just a failure, right, into a pullback, and then up we go from there. Okay, those are 4 different setups, right? Nested failure, 2-try failure, pullback pattern, 2-legged pullback, right? They're all very similar, but they all have their own reasons to be used. And again, as I mentioned earlier, right, if you want a deeper dive into all of those patterns, grab that free course in the upper right-hand corner. I'll also put a big red button there below the video tonight, right, on our trading blog. Now, what if the market keeps going higher here? Okay, what if it keeps going higher? I'm anticipating as it goes higher here that we're going to end up sitting inside, right, of a trading range. Now, what's the best way for us to trade a range? We just talked about this, right? We'll use the size of the range to find our buy zones. Then, what's the best pattern for a buy zone? The best pattern would be the failure pattern, right? The failure pattern. So let's say, for example, we go back into that range. Right? We go back into that range. We start chopping around sideways. Now, what do? We wait for the bears to try to take it lower, right? Let them try to take it lower. We're not going to sell this. What we're going to do is we're going to wait for that moving average to come over. Let those sellers try to sell off of it, right? Like we know they will. And we look to buy right into their failure. Now, this obviously is very, very similar to if we pull back right now. The difference, though, is if it goes up into a trading range, we want to stay the heck out of that range. Okay, that's the only real caveat of that range-bound market. Stay out of that range. Right? Now, what if we keep going higher? We blow right through the range, right? What if this thing just takes off to the upside? Where's it trying to go, right? It's probably trying to go all the way back up, right, and retest these big highs up around that 30-20, right? So this thing really gets out of control tomorrow, right? If it really starts to run, what would it look like? Well, it's probably going to be a spike in channel 1, 2, 3, right? If it keeps running, mark up that high, mark up that low, and then, of course, there's your support level, right? Now, this is obviously not drawn to scale, obviously, right? But if we see this thing running, right, really running here, mark up this high to the new high. You know, again, this is not going to be where it'll be. It'll be a little bit higher than this, right? But just for illustration purposes, mark up those 2 highs, use that down at these lows, and buy off of that low, right? That 30-20 area is where they're trying to go. All right, guys, excellent chart here tonight on the S&P. We're waiting for a pullback. If we don't get it, keep waiting, right? If we don't get it, keep waiting. Let's keep going. Over on the Nasdaq here right now. The Nasdaq, very similar to the S&P, right? Nasdaq, of course, what do we know? We know we're bullish, right? What else do we know? We know we have a trading range over here, right? This is that range from earlier on this week, right? So we may end up getting stuck here, right, around that range. What else do we know? We also know those buyers, right, are going to be trying to get all the way back up to that big round number, right? That big round number at 8,000. What else do we know here right now? We also know that this range here, right? That range right there, that move right there, assuming we do pull back here for us now, that range will be this range here, right? That will be where our target is going to be, right, if we do get that pullback, right? That's a very important part of this process. So we know where our targets are going to be based on that pullback. And really, this is very, very similar, right, to the S&P. We know we're bullish. We know there has been very little at all of a pullback here. And so knowing that, right, I don't want to buy high. I'll bet there are a lot of buyers waiting down here right now. They're waiting at a level of support. They're waiting at support so they can gobble this thing up, right? And again, risk small, right, to earn large. That's the key, right? If I could go back in time, I talked about this earlier, right? What would I tell my younger self? I would say, Joe, focus your energy, wait patiently for those risk small to earn large opportunities. Because when you risk small to earn large, when there's a big potential reward on a trade, what that does is that attracts more traders, right? When you attract more traders, what happens? That self-fulfilling prophecy gives you what? A more reliable trade, right? Not to mention, right, your account grows like a weed, right, in August, right? So your account will grow faster that way. But most importantly, these are more reliable trades that way because you're leveraging the mindset, right? It's not just the indicator giving me the signal. It's I'm looking for a setup in an area where I know everybody's going to be attracted to that area because it has such a low risk with the potential, right, of a big reward, right? Those are the trades that are going to really make our account grow, like I said earlier, like a weed, right, in the month of August. So we know that's the case here right now. And as we pull back, right, do we get that straight pull back down? Moving average comes over. Sellers try to sell into it. We know where their stops are, right? And we're looking to buy off those stops, right? And then, of course, into that pullback, right? It's a failure into a pullback combination. Or maybe we see a one, right? A two-legged pullback. Draw that trend line over. Remember, up and over and in, right? Up, over, and in. Remember, you want to see some daylight between that trend line and those candlesticks. Or what if we drop like a rock, right? What if we drop like a rock? It's not a bear market yet, right? It's not a bear market yet. It's a bear market only when they hold, right, off that pullback, draw the level, right, find the high, sell off that high, right, target back down to retest that low. But if they don't, right, big drop down, that momentum tells me what? Let the bears try once, higher high, try twice. The key here is let those bears try twice. Once, twice, let them sell it twice. Once we know they're selling it twice, now we know the aggressive sellers are in, the conservative sellers are in, and we also know where they start experiencing pain, right? And that's the most important thing, right? Where that pain starts to kick in, right? That's where we can now exploit that. We know if we see a nice strong signal candle now, most sellers are going to abandon ship. They're going to buy their way out. They're going to buy back their position and get out of that position. And that's going to light this thing on fire, going back up, right, to retest that high. We also know here that we're back inside that range. So I'd be foolish, right, not to be thinking, okay, let's find a range here. Once we see that trading range, then we can project where that buy zone is, right? Once we know the range, and we'll talk about this more in our trade room and, of course, right, in our video classes here at School of Trade, once you find that range, then you'll know, right, where that buy zone's going to be, okay? Then all we need is the entry pattern. The best way to trade a range is to let them go against the trend here, wait for those sellers to try to sell the pullback, because now you've got the breakout sellers and the pullback sellers. Everybody's in now, and then you're buying once we see that pattern fail, right? That is a very, very common pattern. It's a very easy pattern to learn. There's a very simple set of rules for it, and I go over most of those rules, right, in our free trading course, which I mentioned earlier. Now, what if the market keeps going higher? Right? What if this thing just blasts higher? Well, we know where it's trying to go, right? It's trying to go up to 8,000. So this thing opens up, right, and starts ripping higher here, right, as it goes. Fine by me, right? I'm not going to chase after it, but I need to adjust, right, this channel, right? Need to adjust that channel now, find that new channel, and again, we're going to be looking for, right, most likely going to be that failure, right, into pullback combination off of that low. It could be a deep pullback into a nested, right? You know, so if it was a strong move up and a deep pullback, right, then it's a 1, it's a 2, right, nested back up. So the same patterns we've talked about so far will still apply, right, as the market goes higher. So as you can see here right now, they're pushing right as we open up in Europe, right? I would expect, though, they're going to sit in this range here for a little bit. But hey, if I'm wrong, so be it. If it wants to keep going higher, let it keep running higher. We'll adjust our channels, right, and be ready to buy, right, to risk small, to earn large. And again, any one of those 4 setups is what we're looking for on the next pullback. Nasdaq's looking great. How about some gold right now? Gold, one hell of a move there on gold. And of course, this week had a very good week right here in the newsletter here on the gold. So hope you guys enjoyed that. Now there was one big clue on this chart that we talked about in the introduction. What do we know right now? We know we are bullish, that's for sure, right? What else do we know? We know we're sitting right at a symmetrical, right, ABCD extension, right? So we know we are very high on this chart right now. Could we go higher? Of course we can go higher. We can always go higher. We can always go lower, right? The market doesn't care about this measured move as much as we do, right? If this dollar keeps getting pounded lower right now by all the stuff going on in this world, right, that gold will keep going higher here. So don't be surprised if it does keep going higher. But what else do we know, right? We also know, of course, we got this reversal line, right? And that reversal line might be our best option here, right, for that deep pullback. But there's one more thing I'm watching, and that's this channel, right? This channel, what's the first thing that stands out on this channel? It's bullish. It's very wide, right? See how wide the channel is? It's a wide channel. Now, in my intermediate classes, right, we offer 3 levels of membership here at School of Trade, right? We get our beginner classes. Our beginner classes will teach you how to work with your broker to open up the right account, how to read your statement, how to do all that account management stuff. It talks about using your computer in the right home office environment, installing all the software correctly, using the indicators correctly. We talk about economic news, right? What news to pay attention to, what they mean for the markets, right? The beginner class talks about psychology, right? What we call the trader's mindset. And it covers all the important theories, right? Things that we use in our trading strategies. The beginner class is honestly what most trading websites would call their advanced classes, right? So beginner class is going to build that firm foundation. Once you lay that foundation, then you go to the intermediate course. And the intermediate course is where we now start to learn how to use all the charts, right? How to use a moving average properly, that is, right? How to draw trend lines, find channels, use ranges, and all the little details that come along with it. Then, by knowing how to use your technical analysis, then in the advanced classes, now we use all of that together, right, with what I call the 3-step strategy, right? You've got all the pieces, right? You've learned how to set everything up. You've learned how to use all the stuff. Now the 3-step strategy is how to use it all correctly, right? How to identify the market conditions, how to find the right levels of support and resistance for those market conditions, and how to time the entries and the exits properly by using my 4 favorite setups, right? That's the way we learn them. Now, in the intermediate classes, in the intermediate classes, we talk about these channels, right? And these channels, there's one thing you always got to remember, and that is when the channel is wide, right? When it's wide, a wide channel allows momentum to build as it runs. Now, why is that important? Because anytime we have a strong momentum move, what usually happens? We usually see another leg. So the moral of the story is that if the channel is really wide, it allows the market to build excessive amounts of momentum. That momentum is often so strong that it won't pull all the way back to the low of that channel. So as much as I want to say I'm going to wait for a pullback to the low of that channel, as much as I hope that we get a deep pullback to the low of that channel, I just don't think we will. I don't think we will. This momentum is way too strong. So if this channel it's too wide to expect this market to pull back right all the way, then what's the use of it? The midline. right? The midline. This is pretty much the only time, right, that I would recommend using a midline. And that is when the channel is really wide. And it's not just because it works, but because it makes sense, right? The momentum is so strong, we're probably not going to pull all the way back to the low of that channel. It's probably not going to happen. It might happen. I hope it does, because that would give us an easy way to risk small to earn large, right? But probably not going to happen. So in these situations, that midline becomes my very best friend. It really does. So what I'm looking for here now is how can I use that midline, right? How can I use that midline for a shallow pullback and a retest of that high? So let's plan on that, right? Let's plan, because there really are three, let's say four scenarios here. One scenario would be, what if it keeps going higher, right? Not likely, but definitely possible. Second scenario is, right, we got this big move up. If nobody wants to keep buying, but nobody takes profit either, this market will start going sideways. So we definitely need to be ready for a range here. And then, of course, do we pull back a shallow pullback, or do we get the deep pullback? Those are really, right, the three main components here right now. So as I look at this here, right, let's go ahead and adjust this channel here now, drawing off these highs. I'm going to leave it right there like that, right, down off this low. Let's add that midline on now, and let's make that midline, right, like a nice dark color here so we can easily see it. Okay, so there's my midline right there. Now, as I get that pullback, right, now let's talk about this. Okay, so first of all, we know most of this already, right? If I see a shallow pullback here, right, down to that midline, what's going to happen? You got it. Moving average comes over. Seller failure off the moving average into buyer pullback. Where's my target? Back up to retest that high, right? It's a seller failure, right, into a buyer pullback, failure into pullback combination. What if we collapse though, right? Again, not likely, but what if we collapse? If we collapse, right, it's probably going to end up being a 1-2-legged pullback. Draw that trend line over, up and over and go. Or what if we just straight down, right? We collapse back down. Now that momentum is so strong for the bears now. The nested, you got it, the 1, the 2, right? Let those bears try a couple times, right? 1, 2, then buying into those stops. Again, I hope we get that tomorrow. It doesn't seem likely right now, but it is possible. So we'll wait for it and be ready for it. Third scenario, right? Obviously, what if we go sideways up here, right? Gold is really not at all-time highs, obviously, but it's at yearly highs, I believe. We really don't have much to compare it to over here. It's not like the S&P and the Nasdaq where we're just trying to go back to retest those highs. There really aren't a lot of targets up here to kind of whet the appetite, right, of these bulls. So we may see, again, buyers may not be willing to buy up here, but those same buyers that are already in, they may not be ready to sell just yet and get out for profit yet. We may sit here. If we sit here and this becomes a range, remember, the size of that range determines where the buy zone is. Once we know the range, then we can look for that 1 try, that 2 try, let the bears try once, let them try twice, 2 try failure pattern, right, and back up into that range we go, right? What if we keep on going? Right? What if we keep on going? If we keep on going, we're going to a gajillion. No, we're probably not going to a gajillion, right? We will probably end up looking at this as a spike in channel, right? If this keeps going here, this will probably become, right, a spike in channel, right? That's what it looks like right now. If we keep on going where we're going right now, kind of grinding our way higher here, it's a spike in channel. What does a spike in channel always tell me? It tells me mark up those deep lows, wait for that deep pullback. You got it. Look for that failure. Right? Into that pullback. And then back up we go from there. Now, obviously, it may not be at the midline of that channel, right? So don't let that, this was not intended to be drawn off the midline. The midline just is coincidence here in this example, right? But if we keep going higher here, look for that spike in channel. Don't chase after it. You're still waiting for that pullback. Let those bears try a couple times to sell it. right? Let them take it lower. Let them try to sell off the moving average, right? Moving average comes over, failure, pullback, and then back up we go. Very excited to see what we get tomorrow on the yellow metal. And again, don't forget, we open up our trade room every morning at 8 o'clock Eastern time, and we're going to execute this strategy together. Last but not least here, how about some euro? Boy, that euro took off to the upside. Euro very slow today. It's been slow all week. You can definitely tell it's right in the dog days of summer, as they say. What do we know about euro? We know we're very, very bullish, right? What does a strong bull move tell me? It tells me that buyers are waiting, right, to buy that pullback. Why? Because they want to risk small to earn large, right? Absolutely. What else do we know right now? We also know we've got that move coming off that low, right? That leg right there. If we do get that pullback, right, that will probably be, right? Can you see where I'm going with this, right? That'll be where our target is. Okay, makes sense. That'll be the most reliable target as we go. What else do we know here? We're right back in that range, right? We're right back in that range. What else do we know? We also know, yeah, it could keep going too, right? Look at this, right? This could be, right? This could easily rally all the way back up towards 14,000. So if, again, this is all kind of, fantasy land right now, but, this whole move was sparked because of dollar weakness. If that dollar keeps on tumbling, right, this thing could easily get caught, right, in a short covering rally here, and this could easily take off to the upside. We got to see proof of that first. Right? Definitely got to see proof of that. You don't want to buy it right now just for that reason, right? Wait till you want to buy right now. If you buy right now, your risk-reward ratios, at least in a short-term time frame, are way off, right? If I buy right now, my risk is this big, right? And my reward is, I don't know, right? That's the problem. If I wait to buy the pullback, now my risk is this big, and I know exactly where my reward is. Right? I can get into that type of stuff, and a lot of people will too. That's why those trades are so much more reliable. So a lot of this is going to be repeating myself from what we saw on gold, right? But let's go over this here one more time here, right? We know we've got that channel coming off that high. I'm marking up right off of that low. We may see the full pullback here, right? Or we may see a very shallow pullback that may not make it all the way back to that low, because let's face it, this is a very strong run, right? And if the news headlines keep hitting that dollar down lower, this could easily jump higher as well. So what is the plan here right now? Shallow pullback, right? Just below that moving average. Now here's the trick though. You're going to want to make sure you do this outside that range, right? So get below it, let those bears, right, try to sell it. And what you really want to try to do is get those sellers to try to commit to it underneath that moving average, underneath the range. Then we can buy back into the range. What I'll be very careful doing here is trying to take that failure like this, right? Like that. That failure is not going to be that reliable, because now you're buying it where? You're buying it right in the middle of that trading range. Now, if that was to happen, what I would then do is look for a trap, right? Mark up that low, look for a trap, and buy the trap instead. Does that make sense, right? So if it does set up for a typical failure pattern, and I realize, guys, I'm just drawing on the screen right now. But again, that's why I keep mentioning, right, that free course, because that free course, you'll see real examples of these patterns, right? That way you'll get the most out of our time next time, right, we work together. So again, if it does slide lower into that failure, and that failure happens right inside the range, I don't want to trade inside the middle. What I'll do is I'll wait for that trap low, get out of that middle, and go in after a trap pattern entry long. And who knows, right? Maybe we're lucky and it comes off the low of that channel. The low of the channel is not going to be that important in this situation, just because the strength of that move is so strong. Honestly, right? The strength of that move is so strong, the odds are so good, we're going to go back to retest the high. The low of that channel isn't going to be absolutely necessary, but it sure is going to help us. Now, if we see it completely pull back, right? Really strong, right? Really deep pullback, right? Now you got to think, okay, that momentum is very strong. Let those bears try once, let them try twice, and then buy up from there, right? Or you've got that two-legged pullback, right? One leg, two leg, up and over, right? And in, right? Up and over and in. We go up, over, right? And we're buying off that trend line. Those are tricky because you've really got to be disciplined to wait for the market to go up. It's very tempting to want to chase after it as it tries to go higher. In fact, that's kind of how I learned that pattern. I learned that pattern by getting stopped out of foolish trades, right? Buying as it went higher here just to see it stop me out and then rip higher as it, I swear the markets laugh at you right after they stop you out and go without you, right? It's like they're watching me sometimes, but that's the two-legged pullback, right? That's a two-legged pullback. Now, don't freak out if the market goes sideways here, right? If we happen to go sideways here, don't freak out too much. Just wait patiently for that one, that two, right? And we're back up from there. Let those bears take it lower. Let the breakout sellers try it, right? Let them try it. Then let them try it again. What's happening is the breakout sellers, the pullback sellers, they're both in now, and now we know where stops are, and we're literally buying right into those stop losses. What if the market keeps going higher, right? If the market keeps going higher, keep an eye out for that spike in channel, right? If we keep going higher here, keep an eye out for a spike in channel. It doesn't mean I should buy this just yet. It just tells me now, okay, now you know, wait for that pullback, that failure, right, into pullback combination, and then up we go from there, right? You're trying to buy, again, that deep pullback as we keep going. All right, guys? And then don't forget, right, could these markets reverse? Absolutely. All of these markets could easily reverse. All they need is some strength. So, right, strong move down, that's one. Pull back to the moving average, that's two. Strong move off the moving average, that's three. Right? Remember, a strong move down does not guarantee another leg when it goes against the trend. Right? What it does mean, though, is you've got to respect once, twice, and then buy. Right? You also don't want to just guarantee, right? You also don't want to blindly to sell this thing. Right? We're not a bear market yet at that point. Get some proof, show me we're bearish, mark up that low, mark up that high, right? Find that new hidden channel, and we're looking to sell off that high. Target, of course, now back down to retest those lows. All right, guys? Boy, we are just getting this party started. Don't forget, we trade the strategy every morning, 8 o'clock Eastern time, right, in our trade room. I want to see you there with me next time. Boy, what a great week we've had this week. Third week of the month, almost finished up here, right? Finally, Friday session, summertime Friday session starting off tomorrow. Get in there early, get out early, keep those eyes open, right, for those dollar moves lower for gold and euro. And of course, all eyes and ears tomorrow. We're listening to Fed, we're listening to trade, we're listening about OPEC. A lot going on tomorrow as well. So keep with us, and don't forget, come join us in our trade room Monday through Friday, 8 o'clock Eastern time, because what you'll notice is when you join that free course I'm going to send you, right, is the strategy is very simple. What's not so simple, though, is applying this to a real market when you don't know what's going on, right? Every day is a little bit different. It's like a puzzle. Right? I've seen thousands of these puzzles over my almost 15 years of doing this, right? It's relatively easy for me to make it easy for you. Come out and join me in the trade room as a member. To get started, it's very, very simple. Grab the advanced course right below my ugly mug tonight on the video. Grab the advanced class. That includes all of our video classes, all of our trading sessions, all the ongoing support, all the tools. Everything's included in the advanced membership. If you're not ready yet to be a member, not a problem at all. We have, I might be biased a little bit personally, but we have one of the best free trials in the business. The free trial comes with your free trading course, your free pass to our trade room, hundreds of hours of the same setups that we find every morning in our trade room. The free trial is great for anybody who's just getting started, or if you're frustrated because you're not getting the results that you really should be after a couple of years of investing in your trading career. Don't forget, call me, right? Call the office anytime you guys have any questions. We got live support if you're outside the U.S. I'm always here standing by, and I appreciate your time here tonight. So thank you so much for tuning in. As always, my name is Joseph. Tomorrow morning, and then, of course, don't forget, no newsletter on Friday evenings. Next time you'll see me and deal with my bad trading jokes is next Monday afternoon. So come back and see us on Monday if I don't see you guys right in the trade room tomorrow morning. As always, my name is Joseph. Be well out there. Be nice to each other, will ya? Have a great weekend. If I don't see you guys tomorrow, and I'll see you guys on Monday afternoon for the next edition of our newsletter. Adios, amigos. Bye-bye for now.